Hey, welcome back to Market Chat with Brenda and Lori. I'm Brenda Alfano. I'm a mortgage advisor.
And I am Lori DaSilva. I work for REMAX Elite and I specialize in residential purchases and sales.
Great. What do we got on the agenda today, Lori?
Well, here's the agenda today. So, scenario. Had a buyer, they were in the middle of their sale, and when I say in the middle, I mean middle towards end. They were past their inspection period. They had done all their negotiations, and at that point, they were really just waiting for escrow and the lending side to finish their paperwork, right?
Mm-hmm.
Now, you will probably know a little bit more about this, but they literally were in the underwriting period, and during underwriting, I'm assuming there was a flag, but what happened was the employer of this client had offered time off, unpaid time off, and they decided to take advantage of it and take a week off, with the family. How does that affect underwriting, Brenda?
It can affect it greatly.
Yes.
Because, like for me, when I'm in pre-approving a client to go shopping,
Mm-hmm.
and it could take them a couple months to get a house.
Right.
So we pre-approve them to go shopping. We're pre-approving it on the income that they are currently
Right.
making and have been making for some time, because that's pretty important. So if they're a 40-hour-a-week person, have they been doing that for the last year at least, so that we are stable with our income?
Mm-hmm.
I've gotten pay stubs, I've looked at all of that and said, go shop, enjoy.
Right,
I
right.
pre-approved them on that. So what happens in underwriting is sometimes, especially lately, and especially during COVID
Mm-hmm.
and the pandemic, the underwriters were asking for up-to-date pay stubs. They usually have to be up-to-date up to 30 days, but
Okay.
at that time, and now kind of, they're asking for them like up to the minute, practically.
Oh,
like
wow.
your very last pay stub. Say you get paid twice a month or once a week, whatever. So what could have happened is that
Right.
person's pay stub showed up with less hours.
Oops.
Suddenly, what does that look like? Well, that looks like not stable income.
Oh, okay.
So now we're looking at, are we having to calculate a variable income? There's many flags there, because now, is this going to be the future? Is this what this person's always going to be doing?
Oh,
We
okay.
pre-approved them on 40 hours. Do they now work 30? Do they now work 32? Is it
Right.
going to go up and down? Because if it does, then we have to take an average. The
Mhm.
underwriter has to take an average. Well, sometimes that might not be a problem, but many times it is, because if you're pre-approved at 40 hours a week and you cut a week out,
Right, right.
that's huge change in your income. So that's what's so important about that. And right now, Fannie and Freddie, who are the conventional lenders, are being very tough on income right now. They're being very tough on lending, but they're definitely being very tough on income, to the point of the nitty-gritty of variable hours actually
Right.
affecting things. So it's very important
Right.
that you don't take time off during the purchasing time or the shopping time.
Right. So another scenario that had come up, had a client, same thing, we're right towards the end of the purchase, and they decided they wanted to buy all new furniture for their place, which they're excited, right?
Yeah, absolutely.
And so they bought all new furniture. So how would that affect the loan?
Right. Okay, so what happens towards the end of the loan, after you'll get final approval from the underwriter, but they will run what's called a soft pull credit report
Okay.
to see if there's any new debts. So depending on how that person decided to buy that
Right.
whole house of furniture, if they paid cash, who cares,
Right.
right? That's fine. That's not going to affect anything unless they were silly enough to use their down payment money, but that
Yikes.
doesn't usually happen. I've never had that one happen. But if they went on financing
Mm-hmm.
with that, well, that's another debt that we have to count. Or if they use a current credit card, but they're, so maybe it was $5,000 more.
Right.
Well, that payment went up. So they're going to look, the underwriter is going to look, does this new payment still fit with the debt to income ratio that they got approved on?
Oh, okay.
So if they're tight on debt to income ratio, as far as we're concerned,
Mm-hmm.
that could flip the whole deal, the whole transaction. I've had an agent, I remember once I was working with, he literally had to have them take their furniture back
Oh my goodness.
and get their money back, get the whole thing reversed.
Yikes.
so that they could continue on with the transaction.
Oh my goodness.
So it's very important that, but what I like to send out a do's and don'ts at the
Yes.
beginning of a transaction. But if you're gonna do anything, any expenditure of money, talk to your lender first. Like I used to tell people, it's like a car loan. Say your car breaks down. Well, we often all need cars to
Right.
get to and from work. Okay, do you need to buy that most expensive car? Or can you get by on a junker for at least until the home purchase closes?
Right.
Or are you just not gonna have any option? You may not be able to buy the house, if that's the case. But talk to your lender. Now, what's cute is I've had actually people call me. They listen, I love this.
That's good.
They listen, they read what I send. This is usually first-time home buyers. And they're like, okay, can I put this on my debit card? Well,
no.
yeah, it's very cute, but I'm very proud that they're listening to me and paying attention. Obviously, a debit card is not a loan.
Correct.
It's taking money out of your own account. So
Right.
unless that puts you into overdraft.
Right.
Right, and you had to borrow from your line of credit, but just to use a typical using things. So don't do anything unusual with money, with
Right.
financing
Right.
during the shopping
Okay.
and the purchase time. And that could be several months.
Right.
Right.
And always talk to your lender.
Always talk
Always.
to the lender about that. It's really important. Anything else on that?
I think that's it for today. Those were
Yeah,
the two
those are some
scenarios that
steps we were talking about. So just keep in mind how important the income factor is to you getting approved for a loan. I'm gonna throw in here something else that just popped into my head.
Okay.
Say you have a second job. Say you just took on this second job.
Okay.
We are not allowed to count that income unless you've had that job for 2 years.
Okay.
So while it might make your life better, and it's a
Right.
nice compensating factor, it will not be counted in your income. Same is true, if I can jump in here and say this, is say you suddenly started getting commission income.
Okay.
Same job, maybe they started giving commission. 2 years before we can count that commission.
Okay. Okay. I'm going to throw out another scenario.
Yeah.
Have you ever had a situation where somebody had been laid off in the middle of a purchase and sale? Is it possible, and they got another job right away before closing, is there anything in there that would affect, or would they have to call it quits, or?
Yes and no.
Okay.
Okay, so if
Okay.
conventional lending, as long as it's the same line of work,
Oh, okay.
usually they only want to see a 2-week paycheck.
Okay.
Or a contract, say it's a contract like kind of a thing where you're guaranteed an income on your contract. FHA, it's a 30-day paid period that has to pass before they can. And then again, we're gonna have to look at that gap in employment.
Okay.
So that's gonna be up to the underwriter, like how big was that gap? Because you
Right.
can't count that unemployment income. So, that's gonna be a definite case-by-case scenario, but it
Okay.
is possible to proceed.
Okay. Okay.
It just wouldn't be if you were out of work through the end of the transaction, because there would be no end of transaction if that was the case, right?
Right.
That's a great question, though.
Yeah.
That's really important.
I don't know why that popped in my head.
Well,
but-
that's
yeah.
the thing, income is so important to the whole transaction,
Right.
I
Right.
mean, we have enough trouble sometimes with, say, people who are have a lot of investments,
Yes.
but they don't pull from it very much and say they're retired. We have specialty loans for those, but they're not gonna fit a normal transaction. We know they're good for it.
Right.
We know they're good for it, but without income,
Right.
it's so hard to get a loan approved. There are out-of-the-box lenders for that and transactions or scenarios for that. But yeah, just keep that in mind.
Okay.
Yeah,
Well, that's all I got for today.
yeah, it's been great. Thanks so much. Again, like,
Thank you.
subscribe, and we'll see you next time.
Bye.
Bye.